This was another month where the fund delivered a modest positive return in quite a volatile market, a market which in the UK was going up, but definitely had a few wobbles in the mix. As you might expect, it was actually long wins that led the way for us. It's very important in a rising market that your long book's working harder and more effectively than your short book, which is clearly going to be a drag. So the main two winners on the long book were defence technology group Kinetic, which had a really good set of numbers, strong outlook. And I think defence stocks are having a bit of a second wind really on the way Ukraine is panning out, sadly. And I think that's probably been a pretty strong driver and people are coming back to those stocks a bit. That's had a strong rally on those numbers. M&S, which had been a big winner for us last year, but actually been quite a dull position this year that we'd been monitoring, but maintaining it at a pretty significant level in the portfolio. Had a really good set of numbers again and upgrades there. So good to see that coming through. M&S is a real winner in the high street now, having been a loser in the high street probably. As people moved online and other brands came through. It's a survivor brand. It's got a really relevant clothing and food product now, food in particular, and we think it's probably got legs. So that remains an important position for us, and it remains modestly valued as well. We had a couple of other good short wins in terms of positive contributors, one in the spirit sector, another on software. So, nice to get a couple of small short wins in a rising market. The main headwind for the fund was one, large short position in the telecom sector, UK telecom sector, which delivered, better than expected numbers. Expectations very low. Long term has been an excellent short, but it had quite a squeeze and a rally, which hurt us in the month. And we kind of get that perhaps these were better than expected numbers in a very, very low expectation environment. You'd expect a positive reaction. So we'll see how that pans out. We remain pretty sceptical on long-term prospects, but we have to be awake to how markets perform in the short term as well, of course. Elsewhere, the airlines, a bit of a headwind for us on the long book. Airlines generally in travel being quite weak, and there's slight feeling that after a pretty strong early booking season, it's a bit more competitive out there now, and maybe UK outbound travel, people are a little bit of a squeeze on the wallet. UK weather has been bad though, so perhaps we might see a late surge in bookings as people look to try and find some sun. So we'll keep an eye on that. But yeah, in the short term, that's been a bit of a headwind. Done a few trades in the book, as you can imagine. Probably the most significant was selling Intermediate Capital Group, which is the mezzanine finance group listed in London, which has been a really good contributor for us actually during the year, but we feel that it's pretty much up with events now. So we've moved on from that. This remains an exciting market, I think, to operate in. The UK's on more radars, which is good. No shortage of opportunities for us. Interestingly, looking forward to seeing the IPO market reopening this month. There's more deals around, more book builds and stuff. So definitely more active capital market we have today, which is a good thing. We've been waiting for that for a while, but no shortage of opportunities, and looking forward to delivering into the half year a really good solid first half for the fund. Thank you very much again for your support, and we look forward to updating you in about a month's time.